Okay, lads, so we'll have a go at that 2018 examcraft suspense kind of question. We did earlier today. I'll finish it off, so I suppose I might as well do it in full, just to just so as you have it. You can go, you can go from start to finish. Anyway, I'll go through this first part of it quite quickly because uh, obviously we did it earlier on, so and you were pretty much all there in class, so. Um, it's probably the easiest to just fly through it. Anyway, Berger Limited. So first of all, Berger Limited is a sport shop retailer, so that's always what you check. So when he's buying stock, if it's related to the sport shop, that's purchase of trading stock. So that's purchases. If he's buying anything else other than stock, it's debit, whatever else he's buying. So um, all right, Berger Limited purchase stock on credit for 3,000 plus VAT at 23%. The only entries in the accounts were that of the VAT inclusive figure on the debit side of the equipment account. So on equipment, um, he put the VAT inclusive amount on the debit side. So that would be 3,000 by 1.23, which is 3,690. So we need to undo that, like so. He's then put the VAT exclusive amount on the credit side of his creditors. United Sports is who he's buying off, so he's a creditor. So that'll be 3,000, and we have to undo that. So that gets us back to zero. So what should he have done? So it should have been debit purchases of 3,000, debit VAT of the VAT amount was 690. Okay, so it's always, remember what I said a good few times at this stage, you always show VAT separately to purchases, or you always show VAT separately on everything. Okay, but you never show VAT separately in creditors. So the full amount, the 3,690, has to go on the credit side of creditors. Okay, so that's that one done. So in our equipment, we've 3,690 on the credit. For VAT, we've 3,690 credit and 3,000 debit, so that's 690. For purchases, we've got 3,000 on the debit, and for VAT, we've got 690 on the debit. So that gives us 3,690 on this side, gives you 3,690 plus 690 on this side. So the suspense will be 690 on this side. Okay, so then you put in your being, and then whatever it might be. So, so that's the first one. The second one then, a credit note sent to a debtor had been for 290, had been entered in the day books as 920. So they've put in the wrong number into the day books, which means that will follow all the way through into the accounts. So it was posted to the incorrect side of the ledger's accounts. So a credit note sent to a debtor, debtors can only ever deal with sales returns or sales returns. So if it's credit note, it's sales returns. So sales returns, the debtor has to have should have gone down by 290. So it should have been on the credit side as 290, but what they've done is they've put 920 on the incorrect side, which is over there, which means they've put 920 here. So we undo that, step 2, undo both of those, so that gets both accounts to back down to 0, and then do what should have happened. Debtor should have gone down by 290, which will mean sales returns goes down by 290. So we've got 1210 then for your for both debtors and sales. So for debtors, it's credit 1210, and for sales returns 1210. And we'll do our being there. So that's the second one. Third one is your normal one. This comes up in most questions. Two accounts, purchases and creditors. So credit out, Berger Limited return goods, return sports gear previously purchased on credit. So purchases, returns, and creditors. Our job is to get these accounts back to zero first. So what's he done? Purchased on credit from a supplier for 1750 and entered this in the relevant accounts as 1570. So he's put 1570 on the debit here, and he's put 1570 on the credit of purchases returns. So we'll undo those, getting us back to zero. However, a credit note subsequently arrived from the supplier showing a restocking charge of 200 to cover the cost of the return. The only entry made in respect of the credit note is a credit entry of 1550 in the creditor's account. So we'll go 1550, which is what he did, and we'll undo it. Okay. So what should have happened? That's the accounts back to zero. It should have been a credit note for 1550. So creditor should have gone down by 1550. And purchases returns should go down, or should be 1550 there. Okay, so that's that one done. That comes up pretty much every year. So we have purchases returns of 20, 1570 on the left, 1550 on the right. We'll have creditors of what's 1550 plus 1550 minus 1570. So 1530, and then the suspense will be 1550. The suspense always has to be the same as that number there, because that's the one that's only gone in once. Working for a delivery van which cost 5,000, a book value of 3,800 was sold for cash for 3,500. So that's the transaction. The only entry made in this were 5,300 entered on the debit side of the sales account. So he's put 5,300 here. So we're going to undo it. And on the credit side of debtors, so he's put 5,300 on the credit of debtors. So we'll undo it. Then we have to do what should have happened. So the delivery van was sold. So delivery vans need to go down. So delivery vans will go down. Delivery vans being an asset, the cost price will go down by 5,000 euros. Okay. If they had a value of 3,800, the depreciation must have been 1,200. So that goes down, and that gets you to your 3,800. Okay. He has received 3,500 cash. So cash is an asset. So our asset goes up by 3,500. So we received 3,500 for something worth 3,800. So there's a loss on disposal of 300. And losses are always debits. So losses are like expenses. So now 3,800 and another 1,200 is 5,000, and then 5,000 there. So that makes it balanced. Okay, so when we journalize that, just the things involved, remember. So we're going to have debtors. Debtors 5,300. On the debit side, we'll have delivery sales 5,300 on the credit. So that's everything we've undone. Because they're equal, there'll be no suspense. We'll have delivery vans of 5,000. Accumulated depreciation of 1,200. Cash of 3,500. And loss on disposal of 300. So that will balance off. So at 10,300, yeah, both sides add up to 10,300. Last one then is the share premium and so on. So it says in December, Berger issued 50,000 uh, share of the shares to a private investor at a premium of 15 cent per share. So uh, so what's happened? He's issued shares. I'll just see if he's actually done anything with it. 50,000 was debited to the firm's bank account. So he's put 50,000 in here. We're going to undo that. And then go back to the start. That's the only transaction. So what else happened? Well, he's issued shares. So issued share capital has gone up by 50,000. Issued shares financed by is a liability. The share premium is 15 cent per share. So it's 15% of 50,000, which is 7.5, which means he should have received 57.5 into his bank account. Okay, so another 7,400, 500 than he had accounted for. So that's that one done. We just journalize that. So you've got bank. So bank was 7.5. Share capital was 50,000. Share premium was 7.5. So now this side adds up to 57,500. The debit side only adds up to 7.5. So there must have been a suspense of 50,000. That's our being there. So that's our journal done. We have to now do our suspense account. So we'll just look for any of the suspense ones. There's suspense. We have a suspense there, so we've two. We have another one here. And that seems to be it. So three of them had suspense. So we need to put them into a T account as they are. So we had 690 on the debit of the first one. And we'll call that equipment. The second one, we had purchases, I think, wasn't it? It's our normal one where we've got the suspense purchases of 1550, or purchases, returns, creditors, whatever you want to call it. And then we had our 50,000 on the debit side here of the last one, which was issued share capital. So debit side is 50,690, credit side is 1,500. So the original difference is 49,190. Okay, and that's just the one we're going to be aware of. That in effect is going to go onto the debit side of whatever it incorporates. So it's creditors in this case. Okay, so next job is the statement of corrected net profit. So we take our original net profit of 102,590. We're going to add on any credits that are trading profit loss account up here and take away any debits. So we look for credits first of all that will be trading profit and loss account. So equipment is asset, VAT is a liability, debtors is an asset, that's suspense, that's dealt with. Sales returns, 5.3, that's trading profit loss account. So we're going to add that 5.3. Again, remember, it doesn't matter that it's sales returns, it's that it's a credit. So I'm just going to bold that to show that it's dealt with. Delivery vans and asset, shared capital, shared premium, they're both liabilities, so they're dealt with. So you've only that 5,300 to deal with. So add that on, and then we're going to take away. So we start at the top, equipment. So what are debtors? Purchases, 3,000. Debtors. Sales returns, 1,210. That's a debit. Purchases returns, 20. That's a debit. Debtors, sales returns, accumulated depreciation, cash loss on disposal of a debit. That can go in. And I think that's the last one. The last one is to do with bank, nothing to do there. So we'll add those up and take them away. And that gives us our net profit of 103,360, our corrected net profit. So we can put that 103,360 in down here. And we're ready to go. Okay. So premises, 450. Now, you sort of get the hang of this. Premises didn't change, all right? So remember, with our assets, it's add debits, take credits, but premises, there's no change to it, so that remains 450. Now, equipment did change. I remember changing equipment, so it's not in the, it is, very first one. There's a credit of 3690. So credits reduce assets. So we're going to take that 3690 from equipment. So equipment was 75,000 minus the 3690 gives you a 71,310. The accumulated depreciation doesn't change, that's 12,500. So equipment is 58,810. Motor vehicles, I have a feeling motor vehicles changed as well. Yeah, delivery vans there. Again, you have a credit of 5,000 to take away. That's 96 minus the 5 is 91,000. But then the accumulated depreciation change as well. That went down, which accumulated depreciation is a liability. So debit is a minus on that. So we're going to take that 1,200 away from the 23,500. So even though that is it's in the assets, it's obviously not an asset. So that'll give us 22,300. What was that? 91. So that's 68,700. Just add those up. Okay, so I'm going to just look at my stock next. So stock never changes. So that's 57,000. Debtors probably did change. So debtors, there's one. So it's still an asset rule. So we're going to take away that 1,210. We'll keep looking at debtors. There's another debtors there for 5.3, so that's a plus, and that's our last one. So we'll add that 5.3 on. To the 26.5. That's 35.90. VAT definitely changed. We've got minus, so VAT is an asset. Minus 690 and plus 690 is 0. So I wonder if I put shouldn't be VAT there. The very first one, that should be creditors. Sorry. So it's minus 690 there plus 690 because it's a debit. Okay, so that being an asset in this question, I have to add on the 690. So we've got 1950 is 2640. And then finally we've got bank, sorry, we've got cash, do we? So cash starts off at 750. There's definitely one change to cash. Yeah, there's a debit of 3.5, so we're gonna have to add that 3.5 onto cash. So it's 750 plus the 3.5 is 750 plus the 3.5 is 4250. Just want you to be aware because I just can see what's coming down the line here with this question. Bank at the moment is 6,900 as a liability, so minus 6.9 in effect. If we look here, the bank change is going to be a debit. We're going to take the 7.5 away from the 6.9, so you're going to end up with a minus number. So therefore, bank overdraft is turning into money in the bank. So in effect, bank is going to be 6.9 plus 7.5, which will be 600 of an asset. So it's going from being a liability to an asset. It's not that unusual, but so I'm going to I'll just put it in brackets here. So it started off as minus 6.9, and then we got 7.5 added in. So that'll give us the 600 there. So we'll add them together. It's 95,080. So therefore that bank disappears out of there. So all we have left is creditors. So creditor starts off at 61,710. Just put that one there. We've got creditors here at 690. We've creditors here of 1530, and we've creditors in the original suspense. So our liabilities rules: add credits, take debits. So we're going to add on 690 from the first one because it's a credit. We're going to take away 1530 because it's a debit. And then the suspense original difference is 49,190 on the debit, sorry, on the credit. That becomes a debit rule. So we're going to bring it over to the debit side and we're going to take that away. So we're going to take away the 49,190. So what we'll have left is 61,710 plus 690 minus 1530 minus 49,190 is 11,680. just check that. 61710 plus 690 minus 1530 49 190. So that should be 140 there. See, that was going to balance if we didn't change that. So take them away from each other. And then obviously add on your answer. So then we've just our issued share capital. So issued share capital in our last one starts off at 500,000, and then there's another 50,000 on the right, so it goes to 550. Now, I would suggest you better put in the authorized as well. And then you had a share premium. The share premium is a credit of 7,500. So that's on the right hand side. Share premium can only ever be positive. So let's stick that in there, add them all together, and 660860 the balances. So hopefully that's all right for you. We might do one more tomorrow, and then we'll move on to something else next week. All right, talk to you tomorrow.